Okay, now that we understand what momentum is, let's now see how we can use it as an actual trading indicator and where we can recognize buy and sell signals around that. So it's actually very simple to use and simple to recognize, which makes it a nice indicator. It's always nice to have indicators that are visually appealing and really helps to, kind of confirm or strengthen your choices. By the way, if you're using a trading platform, a lot of times they may not list it as momentum per se. They might call it rate of change or an abbreviation of ROC. So if you see ROC, that's momentum. That's the classic momentum indicator. We're going to learn later about RSI, relative strength index, and Scholastic oscillator, and other types of momentum indicators, but this is the core kind of basic one that everything kind of builds from. So let's learn about that and use it as a trading indicator. So when you're looking at the part of a chart that you would add on to your regular price chart, actually, usually it's on the top or the bottom when you add it onto your price chart. And you would see like this kind of a little breakout, and it would look a little bit different than your regular price chart. I don't know if you're already looking at and see how it might be a little different here, or looking at Tesla and Procter & Gamble as a couple examples, and you can see they're different because they're different stocks, of course, they're different securities. But if you look at it, you'll see that the time is still the same. The oldest time is to the left, going to most recent time to the right. But if you look on the right-hand side, what is represented is not price. That's a real important thing. Tesla is not selling for, at this point, $35.94, and Procter & Gamble's not at 76 cents. So what it is, it's not a price, it's a percentage. And you have a zero line there. You see the zero line. And if you're above and below, it's a percentage above and below that price. And that will tell us things as far as being above and below the price. So if we looked at Tesla there on the top, it's at 35.94%. And then we're using as you see in the upper left where it says rate of change, or ROC. So as I was mentioning, that might be what you will find on your trading software. We have it over 10 periods, which is a standard for using for momentum as far as over 10 periods. And so you might be thinking, if you start looking at this and say, okay, what might be important as far as deciding whether to buy and sell? Hopefully you're looking at it and you're thinking, oh, maybe that percentage is important. How big the percentage is important, but really what might be important is whether it's above or below the zero line. Is it a positive number or is it a negative number? And if you were thinking about that already, great for you. If not, let's talk about that, because you're right on. The zero line equals the price basically X number of periods ago. So in this example, we mentioned we were looking at 10 periods. So the zero line indicates that will give you an indication how much above or below that percentage was 10 periods ago. So again, we're looking at acceleration, deceleration, we're looking at momentum. Again, not price on the right-hand side, it's a percentage. So you see it's a 35.94. So the signals that you want to be watching for, and where it makes it visually appealing and easy, is it's a buy signal if it crosses above the zero line. It's part of signaling an uptrend. So if you look at Tesla here, you can see it crosses below and above the zero line, several times or a couple times, but mostly it stays above that zero line. So if it crosses above the zero line, it's an uptrend signal, and it's a buy signal. You'd sell if it crosses below the zero line. So that's basically signaling a downtrend. The percentages up or down or show you the strength around that momentum too. Something that just barely crosses over that zero line, shows that it's an indication you might want to buy if it's going above it, for example. But it's the strength of it, if you wanted to wait to see, make sure to kind of confirm and let it be stronger to build out, higher above that line would show you more of a stronger number around that way. If we look at it, it's pretty simple, but if we look, sometimes it does diverge, where momentum and price move in the opposite directions, maybe ever so slightly. So if you see that, technically both are going in the same direction, because momentum is really measuring speed. It's more a failure to confirm the price move if it's going a little bit in the opposite direction. So if you see this here in this example, it's above the zero line, which is a buy signal, but it's just headed the opposite way slightly. If you look below to the chart, you can see where we've got our candles. Just slightly different. Might start be going sideways in the price chart, and you can see the momentum indicators kind of going along with it too a little bit. It's not a huge example, but it gives you an idea of what it might look like if there was a divergence going on. And you can also see that the volume in this example is really steady or low. So that's, remember, we would think of volume as a way of confirming things. So if this was a definite crossing below the line and volume was high, this would be an example, or rising maybe, this would be an example where, oh, that sounds like a pretty strong sell signal. Where this might not be as strong a sell signal, or a change, going below the line. And as you can see, it kind of ticks back up a little bit, as far as going up on a little bit of an uptrend after we get outside that little red, rectangle bar I highlighted. But then it starts going down from there. And as you see it go down to the right, you'll see how it's now crossing below the 0 line up above in the momentum indicator. And that's what we're looking for, is when it crosses below, we want to sell and get out before it goes down further, is the idea. Here you can actually see there's a breakaway gap in here. I'll take, you can see the breakaway gap. As we remember from the gap lesson, it jumped way up as far as price, overcame the range of the previous, in this case, days. It could be minutes, hours, whatever your trading range is, but this is days. So you see it had a breakaway gap that was then reinforced with a little bit of a pullback there after 2 days, but then only for a couple of days, and then a strong trend going forward. And you can see how that the momentum indicator crosses above the 0 line right around that same time and then starts reinforcing that. So that's another way you can use to help reinforce that maybe your breakaway gap is really something that's going on. In fact, if we look at it a little bit closer here, you can see that not only is the momentum kind of confirming it, but also we have our volume as another confirming measure. So we can look at this and apply some of our different lessons and say, I've got a breakaway gap. I waited for it to develop, because you want to make sure the trend develops. I did that, so hooray for me, or for you. And the momentum indicator is rising above the 0 line, then certainly going well above it, so it's kind of confirming that. And the volume going from some very, very low volumes right before it kind of confirmed it. So if you see that, you've got really basically 3 indicators kind of confirming each other, particularly in something like a breakaway gap, which we know breakaway gaps are designed to lead to higher strong trends, right? So that's a strong indicator showing a strong trend going forward. So at this point, you should be very happy. Yay! That's a good strong indicator confirmed 3 ways. Again, nothing's perfect, but that's a really good strong indication you would have came across, confirming it with multiple different things beyond just the breakaway gap, which might have been your primary indicator.